We're live.
Good morning. It's the Monday Morning Money Show. It's only morning for just about 50 some odd more minutes, and it's going to be high noon. Today's show is a great show. I have some great advice for you. I have some references that you're going to want to hear about. Some people who are experts who've taught me some things, and I'm going to relay the message right to you. But first, I want to thank my sponsor, Connected Through Cars by the great and powerful Jeff Stearns. Jeff Stearns has been a guest on this show, the Monday Morning Money Show, and tomorrow he's going to be on the sales show. That guy is full of great information. Man, that's going to be a great show. If you want to really get some value from someone who's been in the business a long time and knows what sales is all about, tune in tomorrow at 11 a.m. Speaking of Connected Through Cars, he has a podcast that's like number one on the Apple iTunes now in the sales. It's just amazing the amount of people who are downloading his podcast. Smith, we have to get our video turned into podcast and get it on the podcast scene fast before we get left behind. Can you handle that?
Yes, sir.
Awesome. So look for Billy Merritt Presents on podcast near you coming very soon. Wherever you buy your podcast. Where's the best place to download podcasts, Smith?
The best place?
Yeah. Where do you go for your podcasting?
Well, I go to Audible usually, but I know a lot of people use Apple iTunes. I like to use Podcast Addict sometimes.
What do you listen to?
Lately. So
while you're thinking about what you listen to,
I've been off the train for a little while, I guess.
I just go, on the iPhone, educate me on this. What's that kind of phone that you have?
It's an Android Galaxy S9.
Does Android not have its own app for like podcasts on there? Like when you with the iPhone, I guess I have iTunes, and then I have this thing, this just pops up there, the podcast, and every podcast that I want to listen to is on there. Does Android have that?
I wouldn't be surprised if it's got the same thing.
Oh my goodness. I don't know about those Androids, but anyway, tomorrow's going to be a great show. We definitely going to have some specialized knowledge for you. Connected Through Cars podcaster Jeff Stearns on tomorrow's show. Speaking of Connected Through Cars, the next sponsor that I definitely want to mention, and it doesn't matter if you live in the 48 connected states. If you live in the lower 48, you need to know about Woody Folsom Chrysler Dodge Jeep in Vidalia, Georgia. Now, make sure you put that V in there when you go search for them. Here's the cool thing about Woody Folsom Chrysler Dodge Jeep in Vidalia, Georgia. Steve Hutchison and the guys over there, they will deliver your car anywhere, white glove delivery anywhere in the lower 48. California, it's worth you talking to Steve and the guys at Woody Folsom Chrysler Dodge Jeep in Vidalia. They are now. There's other places that you can buy cars, but there's nowhere that's going to give you the white glove treatment of the guys Woody Folsom Chrysler Dodge Jeep in Vidalia, Georgia. Tell them Buyback Billy sent you. Okay, let's get right into the show. Okay, I have some investing tips for you today. Smith, as you know, I am huge on investing.
Of course.
Okay, now we get sidetracked sometimes talking about some of the things that really aren't investments. So I want to take the time to explain what true investing is. Now, you have investing, you have speculating, and you have playing, right? So a lot of people, when you think about the GameStop or GameStonk,
yes,
and the AMC and the Reddit raiders, okay, it's wonderful that they are in the. They're involved in the market. What was that?
I was just saying in the market.
It's wonderful that they're in the market. Okay. And it definitely is worth paying attention to. But I don't want people as young as you, Smith, and younger than you, and people who don't get good information to mistake that for investing. Okay. So let me explain what you need to know about investing. First of all, you want to increase your income to the point that you can pay all of your bills. We call that the nut. You want to be able to crack the nut, right? With your income and then have a surplus. If you do not have a surplus income after your nut, then you can't invest. You cannot invest. You have to take care of your liabilities. You have to take care of the things. Your expenses have to be met. Now, we can have a conversation about what it looks like to decrease your expenses so that you'll have more surplus, but I would rather focus on increasing your income. There's a lot of ways to do that, including learning to sell. If you haven't bought the book, The Art of Text Message Selling, you seriously need to do that. It will help you increase your income, especially if you're in sales. And you are a salesperson, whether you admit it or not. Smith, you're a salesperson.
Absolutely.
You know, you have to sell me on your ability to do what we need you to do every day, and you do a great job. You're a great salesperson, right? But I'll give you an example that you're a salesperson, and luckily I found out about your skills before you moved on, right?
Right.
Had you pitched me on your skills earlier, you would have not had to slave in the trenches of the ninja. I know you didn't really enjoy being the ninja, did you?
It had its days.
Yeah.
Yeah, it's pretty monotonous.
And it wasn't exactly it was definitely nothing passionate about it for you, right?
Yeah, of course.
You like making video and doing productions and being around fancy equipment and things like that. So whatever your craft is, you need to craft you a pitch. All right, now I'm getting off topic because I want to stick to investing. Start with investing in yourself by ordering The Art of Text Message Selling from Amazon. If you can pull that up for a minute there, Smith will have it where we can show them what it looks like when you find it on Amazon. There are some imposters out there. Now, once you have your income set up, or once you have established a positive cash flow, it's very important to work on your cash flow, increase your income to the point that you can think about it and that you can actually think about investing. Smith, what would you say to the person who's never invested before? Where do they need to start? Again, we have to invest in ourselves. So the first thing you need to do is buy the book, The Art of Text Message Selling. If you're in sales or if you're not in sales, this is a $19 book on Amazon. That will be the best $19 investment that you can make if you are in sales. So start with that. Invest in yourself. Increase your skills. Okay. Secondly, once you have a positive cash flow, where would you recommend someone go to start their investing path, Smith?
Well, the best place would be obviously the long-term stuff, the obvious stuff. I would say download an app for convenience, but just like I'm looking at now, it would be great to be in with a traditional brokerage at a time like this.
Okay. Yes. And speaking of traditional brokerages on my list right here, of course, when you have some substantial money, a traditional brokerage has some tremendous advantages. My broker is Story Wealth Management. There's another, we'll give them a plug for the show. Send us a sponsorship check. But Story Wealth Management, you get the advantage of having some super smart technology. When it comes to investing, computers and models really, really help. That's why you don't want to play with your investment money. Find a strategy that works. Now, here's the problem, Smith. If someone has, say, 1,000, I'm talking about when they're getting started,
right?
Unless they can find a brokerage who will. I'm trying to say this politely. Until you have a substantial amount of money, you may not get the treatment that you're looking for from a traditional brokerage, right? Like, for instance, the big ones on Wall Street, hedge funds. You can't get in those without hundreds of millions of dollars, So when you're getting started, I think it's important to understand to start small. And that brokerage firm, they can only take care of so many people. Like, it's not them being ugly, right?
Right.
They can only service so many clients. So naturally they have to service the ones with the most money first. So when you're getting started, before you have, I would say $30,000, $40,000, the brokerage house may not be your first stop. Okay. So your first stop is exactly what you were saying. Download an app. Now, my recommendation is CashApp. It's very simple, and it is, no fees, right? with CashApp.
Right.
Okay, and TD.
Very intuitive.
It is very intuitive, very simple. So see, people use CashApp, and people do business with CashApp. I can pay you. So CashApp, tell me, I don't want to get off topic, but CashApp is basically does the things that they said Bitcoin was going to do, right? I can send money to you instantly with no fees, correct?
Yes.
Okay, and you can send money to me anywhere in the world. If I have CashApp downloaded and you have CashApp downloaded on your phone, you can send me CashApp. I pay people every single day with CashApp with no fees. So that's what I mean. What do you need Bitcoin for? Right. So and it trades in dollars. You don't have to convert them into something else. You can just trade in dollars. Now you can also buy stocks on there, and you can buy stocks for as little as $1. Is that correct?
Yes.
And that's great. And Robinhood does the same thing, commission-free trading. Indeed. So if you're trading in, I'm sorry, don't trade. That's my first rule. Do not trade.
It's a bad word.
It is. You shouldn't be trading. That's the thing you need to understand. Young person, amateur investor. Once you get your positive cash flow and you have a surplus of income, you need to start investing, not speculating. Investing. Now, every investment is a speculation because, I consider buying lots of Facebook every chance you get an investment because there's a lot of evidence that says it's going to continue to go up, right? Mm-hmm. Now, it could go down. Therefore, that makes it a speculation. Coca-Cola, Warren Buffett's been investing in it since the 80s or something like that. There's a very good chance it's going to continue to go up. It's not as volatile. Does that make sense, Smith?
Yeah, absolutely.
Okay, investing is something that all signs point toward it's going to go up. So all you need to do is find out what it is that you believe is going to be more valuable in 5 years and 10 years and just start buying. If the price goes up, what should you do, Smith?
Hold.
Buy.
Oh, well, buy. Yeah,
okay,
that makes sense.
Okay, so right there, that's my point right there. You've been around me a lot. And you said hold because you've got that trading mentality because you do a lot of research. There's nothing wrong with doing research. There's nothing wrong with understanding what shorting stocks is. There's nothing wrong with knowing how people day trade. But let me tell you something. Unless you've got millions and millions and millions of dollars, you don't need to day trade because you're competing. It's like sitting down at a table with a professional poker player and you've got $100 and he's got $100,000 in this game. Who's going to win?
The one with the most money.
The professional, and he has the most money. So you do not want to, you don't even need to think about holding. Of course you're going to hold. But if the price goes down, what should you do?
Hold.
No, buy.
Buy more. Yeah, buy a lot more. Buy more than you would usually.
But
that's what I would say.
Well, I understand. But see, this is that's flawed thinking, and there's so many people, Smith, that think exactly like you do. And I'm not being derogatory, but I've got to get through to these young people and anybody who's starting to investing. Stop thinking about trading and holding. All you want to do is buy. You just want to buy. When I say buy, where do you think in 5 years? Do you think Walmart will be worth more or less than it is today?
More.
Then. Okay, in 5 years, do you think Apple will be worth more or less than it is today?
I'd say more.
Okay, so think about companies like that and then find a company or maybe 5 companies that you think are going to be worth more in 5 years and 10 years. And what should you do, Smith?
Buy.
Yes. All right. So at least today I've got one person. So you buy. And when the price goes up, what do?
Buy.
And if the price stays the same and goes flat for 6, 8, or 10 months, what do?
Buy.
That's right. And if the price goes down,
buy.
That's what investing is, Smith. That's all it is, man. And because you made the point on the last show, you talked about the what's the most powerful force on the planet?
Compound interest.
Compound interest. So here's how that works. It goes up, and then the more money you put in there, it goes up, and then the bigger it gets, the more it goes up, right? So I know that's a crude way of explaining it.
Well, I mean, on top of that, even if you've just got a light dividend, 0.5% or something like that, the worth of the dividend is going to go up with the stock most of the time.
That's correct. So now let me explain. When you get a surplus of income, let's say that your nut's $2,000 a month, okay? And and you have a positive cash flow, you can generate $3,000 per month of income after taxes. Now you have $1,000 surplus. Invest it all into one of those 5 companies. You can split it up. You can diversify. But every single pay period, you need to invest as much as you can above your nut into some stocks that are going to be worth more in the future. Now, let's say that we have the ability to invest, which is simply buying, right, Smith?
Yes.
Just buying. Let's say we have the ability to invest $1,000 a month. Or let's back it up. That may seem like too much. Let's say $200 per month. Now you can find $200 per month somehow, some way. Let's for instance, my answer is just to make more money. But Smith's someone who just can't double their income. I think you probably have better advice. What is a money saving tip for somebody who's trying to find an extra $200 per month?
I was actually planning on, I guess this is a good tie-in, mentioning Acorns and their roundup feature. If you've got that tied to your checking account, your card, you can set it so that every time you go to the store, you spend $1.50 on a drink, that last 50 cents gets deposited right in and invested.
Okay, so you're talking about Acorns, the app, and Acorns, the tool is an investing tool.
Yes,
it's a huge platform. That's somewhat tied to PayPal. Is that right, or is that CashApp? I think they're connected to PayPal in some way.
I'd have to look it up, to be honest.
It's okay. It's not important. But so the main thing is you have options out there. Okay. Now that's a tool. I didn't have it on my list. I had CashApp, I have TD Ameritrade, and I had Robinhood. You've used Robinhood, right?
Yes.
Pretty simple.
Yeah, pretty simple. I think like user interface and everything, if you do want to see everything, you know, your average cost and all this good stuff, it's the easiest to look at. I like Webull. It's pretty hard to get used to looking at it, though.
Okay.
It's a lot of information on the screen.
Okay. Now, so here's the key. Find something that works for you. Research all of these before you just jump in there and start doing them. I say get CashApp and just tie it to your bank account, and then find you some stocks, some companies. Don't worry about the stocks. Find companies. You like those companies, you start buying those companies. Now, what Smith's talking about is Acorns. And that may be an easy way to pick up an extra $100 to $200 a month and get it into the market. Here's what I don't like about Acorns. So do your research.
Yes, always.
It's a little complicated to see where your money's at.
Yeah, to actually see what stocks, what ETFs, and all it's going into.
Yeah, they're doing the investing for you, right? Mm-hmm. And it's tied up. Like, now, what I do love about it, it's automatic. You can choose to put in $100 a month or $200 per month and invest into these. You can pick your strategy, right? It has growth, it has whatever. There's several different strategies. But like when you want to get your money out, like, okay, here's the positives. You set it and forget it. Because I said it one time. I did have Acorns. I said it a few years ago. I said it, I don't know, $200 a month, something like that. And I did forget about it. And I looked up one day and I said, oh, hey, okay, I got a pretty good little bit of money in there. How do I get to it? So it took me a little while to figure out how to get my money from Acorns back into my account, you know, because I don't like the idea of Acorns that I don't understand it enough,
right,
to like leave them with a substantial amount of money. Because I'm gonna go ahead and say this to anybody watching, because it's important. You may want to tune out. The purpose of starting small and just buy is so that you can get a substantial amount and then take it and give it to that institutional investor who's smarter than you and me. Okay, I use Russ Story or Story Wealth Management. Once you have a substantial amount, you give it to them, and that's their job. You know, my job is to set appointments, to train people, to coach people. If you'd like to be coached one-on-one, just send me a message. We can talk about how we can do that, because I know some things that you don't know when it comes to sales and marketing, and I can help you. And we can also do that on a one-on-one basis. But when I want financial coaching, I call my financial coach, right? Steve Stewart, thanks for showing up, man. Let's take a look at the comments. Start back over with Candace there.
Said keynote, get started. You start where you are and grow from there. You can't grow until you get started. Don't despise the day of small beginnings.
You got to start. You got to start where you're at. Wonderful. Next comment.
Steve Stewart said should be 10% of your income at least.
Okay, I totally agree with that. Right. But Steve, I hope you're still hanging around. The problem that I see is so many people don't focus on increasing their income to the point where they can invest 10%. Now, I think it should be 30%. I think it should be 40%. I think it should be 50%, but you gotta have a big income to do that. So it's vitally important to increase your income. You can ask Steve Winters down there at the bottom who says, love this. He can give you some tips on how you can increase that income. It starts by increasing your effort, increasing your knowledge, right? So you can always, if you're in sales, you can always find a way to sell more. And then when you sell more, don't spend more. What should you do, Smith? Buy stocks. That's right. Now, so 10%, I love the 10% rule, but I like the 50-50 rule, but that's extreme. You got to start, like Candace said, you have to start where you are. If you can only do the roundup, which Smith's talking about, that'll probably be, according to how much you spend, it's going to be about, It's going to average about 0.5% of every dollar spent,
Right. Depends on how much discretionary spending you go through, I guess.
That's correct, but that's one way. But I prefer where I can get to that cash. Now, but I also have friends, very good friends who invest quite a bit, and they need something like Acorns, or either they need to stick it in an IRA or a self-employment plan or some type of retirement plan that has a penalty if you take it out. Because if it doesn't have a penalty, some people don't have the discipline to leave it there. And, so you got to, like Candace said, start where you can and then get in. You have to know your strengths and weaknesses. I like to see it grow. So I have no problem seeing it there and just keep, piling more money on top of it, buying more. Now, this is where I think it gets confusing. People say, well, Billy, you speculate all the time because I buy Bitcoin and I short stocks and things like that. But to use Steve Stewart's number, I speculate with far less than 10% of my investment income. So I kind of wish we never even talked about speculating and shorting.
Yeah. Well, this is another reason I do think CashApp is a great place to start. It doesn't give you a million options. It doesn't give you all these numbers to look at and ponder over. It doesn't send you into the rabbit hole that I've been down lately, ever since I got into Robinhood, just watching, trying to absorb as much information, and it is time consuming.
It is time consuming, and there's nothing wrong with that. I'm all about being a growth aspiring and learning all you can so that when you're talking to somebody, when you go to that institutional investor and he's giving you advice, she's giving you advice, that you know what language they're speaking.
Right.
Then you can make your choices accordingly. But speculating is dumb. Okay, so let me say that right now. Me buying Bitcoin is dumb. Okay, me shorting Facebook, even though I had some good evidence to think it was about to come down, and it did. Me shorting Facebook is dumb. Speculating is dumb. You should only speculate with money that you can afford to lose. You should only speculate with risky stocks and risky options with money that you had just as soon sit down at a poker table and play a game of cards. Okay. Right. So that's not investing, guys. What I'm telling you is you need to be an investor. Whatever your age, whatever your career, wherever you fit, whatever your income is, you need to be an investor. And that doesn't mean buying into the Reddit crowd, because there's a lot of people who lost their tail.
You can definitely get caught holding the bag, and you never know how long it's going to last. I mean, sure, GameStop went up for quite a while, but then you've seen the same push for cannabis stocks went way up for one day, dropped right back down.
Yeah, you can lose your tail. Don't do that, man. You find you 5 or 6 companies that you believe in and just start buying. Then you get you $20,000. You get $20,000 in a in some type of investment, some type of vehicle, whether it's being in TD or Cash App or Robinhood. And then I would advise speaking to somebody who can help you put that to work in a smarter way. Because there's some tools out there that those institutional investors have that are very valuable. My TD Ameritrade account is very volatile, right? But the money that I have with my investor, it's very consistent. It's going up. And then when you see Tesla go up 500%, you're like, man, why aren't we in Tesla? And then you see Tesla come down 20%. You understand why. You don't invest to get rich quick. You absolutely need to be investing to get rich for sure. And Smith, you and everyone watching this, you absolutely can be rich. So it starts with a mental attitude. Why do you invest, Smith?
I guess the majority of my effort right now is to get cash flow. I mean, I'm diving into, I don't want to use as many as possible, but as far as the monthly stuff, diversify so that I can have that little bit of money coming in every month.
Mm-hmm. So you're doing it for cash flow?
Yes.
Okay. All right. I want to give you
obviously some long-term investing too. I mean, it's great. A lot of these big companies that are established do also have dividends, and sure, they're not crazy high, but they're also not nearly as risky.
So you're spending some of the money that's coming out of your investments?
Oh, I'm reinvesting it back into the same.
Okay, so you're
stocks.
Not. All right, so just so see, this investing is so confusing.
Yeah,
and I want to make sure that these amateur investors watching or people that are tuning in to get some advice that they understand. So I want to make sure you understand Smith Squared. You're not doing it for cash flow, man. You're doing it to build wealth. You just use, you know what I'm saying? And it's a matter of definitions of terms. If you're not spending that money, you're not doing it for cash flow. Okay. So what you're doing it to build wealth. And that's great. And you can make it, you can put it simpler than that. You need to have the mindset you're doing it to get rich. Not get rich quick.
Right.
But get rich for sure. If you're reinvesting dividends, and I know you're doing some buying and selling. I don't recommend that, but that's okay. You're smart. You're making your own decisions. But you're not doing it for cash flow. Now, one day, I'm sure you've already looked at the projections.
Oh yeah, I'm playing on my calculator all the time.
What's your projected? What's your okay? I'm done. I can start living on it. What time frame? You don't have to give me a dollar amount.
It's hard to say. I do think, as you always say, I need way more income. I mean, for it to be a reasonable.
30, 40 years? Or you want to do sooner?
I would think that would be the reasonable play.
Okay. Now, I'm not a very reasonable person, but a lot of people who watching are reasonable, and you're reasonable. Mm-hmm. And I'm changing my approach to talking to reasonable people a little bit. I'm going to make you more unreasonable eventually. And here's what I mean by that. Double your amount invested and just keep buying. And you're not doing it for income. You're doing it to build wealth. And then you put that dollar amount out there. If it's 1 million, 2 million, do you have a dollar amount that you want to share with me?
I think 1 million would do me.
Okay. That's cool.
I'm a pretty frugal guy.
That's fine. And okay. So this is an excellent opportunity. $1 million, man. It's not, I'd rather drink all the coffee and I personally don't want to sacrifice for 1 million. I want to sacrifice for at least 10 million. Okay. But guess what? When you have $1 million, you'll think, okay, let me get 2 million, right? So 1 million is an excellent starting point. I love it. So have you done the calculations to see how much you'll have to put in to get $1 million in 10 years with getting a return of about 7%?
I haven't. I've looked at a lot of these theoreticals, on YouTube and the like, trying to get a ballpark. Let's
do this, Smith. Let's for next Monday morning show, I want you to have some graphs with some financial calculators using your thought process of what you think you need to do to get $1 million. and then live on that. That's what you're thinking about doing, right?
Yeah.
Okay.
Yeah. Well, I mean, I'd say with the wealth comes the cash flow, though, right? I mean, if we got $1 million and most of it's in dividend stocks, I mean, you're obviously going to be reinvesting it for the most part, but eventually,
but that's right. Eventually you'll use it as cash flow. But so here's a terrible flaw with investing.
Okay.
And you know what? Let's make a note or send me a reminder. I want to get Russ Story on here and talk to him about this one specific thing right here, which is retirement and what retirement looks like. Okay. I don't like the idea of retirement. You know, I hope I'm selling something until I'm 110 years old. But most plans for retirement include spending your principal. Like they grow the money. You start with a nest egg, or you create your nest egg, and it grows. And then say you retire at 65. They're trying to see how long it's going to take you to spend all your money. You know, if you live to be 100,
right,
they want you to run out of money. Mm-hmm. That's the plan. Man, you got to give me a better plan than that. So be unreasonable. And you need, so here's somewhat reasonable step towards unreasonable. Okay. Follow me now. I want you to be unreasonable. Unreasonable is when I'm 80 years old, my income will still be doubling every year. That's unreasonable. Okay. It may be hard to think or imagine that, but you need to get there.
It seems like most people are trying to do the opposite around that time, right?
Most people are making a terrible mistake, being reasonable, thinking that, you know, that they can live on less in the future. You need to always increase your income. But anyway, a good step would be to have $1 million and for that 1 million to continue to grow a little bit, and you live on the cash flow or the dividends. Okay. So until you have that million, Smith, don't even think about cash flow. You just need to be, you just want to be just throwing as much money as you can, as much money as you can. How much have you got a percentage of how much you put towards it right now?
I usually spend about $100 every week.
Okay.
I'm aiming for 500 a month. I am pulling back just a little bit right now because I've started dipping into my computer money, and I do need that computer.
Yeah. What do you you're saving for a computer?
Yes.
What kind of computer are you trying to get?
A big one.
Gaming computer?
No, it's going to be for editing. I mean, it'll be a quote unquote gaming computer.
But it's for editing and making things.
Yes.
Hopefully things that can create money for you.
Oh, absolutely.
Okay. So that's
speed up that process.
That's the best investment you can do right there. Mm-hmm. So now listen to Uncle Billy. Okay.
Okay.
How much is the computer?
Well, I'm looking at about $6,000 probably, if not more.
All right. Sell every stock you have and buy the computer.
Oh, wow.
You got to look for ways to increase your income. Now, so that 6,000, can you make money with that computer?
Yeah, absolutely.
Buy the computer.
Yeah, I've got commissions that need to be finished right now.
So see, you're flawed because you don't have anybody who's already done it, right? To say do it this way. I'm telling you, you see all those computers out there in the call center?
Yes, sir.
I bought those before I made my monthly, yearly investment. You understand?
Yes.
This building, all this equipment right here, these screens, this video wall back here, I could have bought stocks with that.
That's true.
I bought the video wall. When I bought this podcasting equipment right here, I didn't have the big surplus that I've since gained, but I bought it anyway because what we're doing is very valuable. We can make money with it, Smith. Speaking of, if you want to increase your income, you need to buy the book, The Art of Text Message Selling. But anyway, that's a tough one to understand. But when you buy the computer, you can't lose the computer.
Of course.
Right? Right now, you're investing in the stock market, and stock markets go up and down. So let's say you have $6,000. You may have more or less. I'm not asking you how much you have, but I'm saying if you have $6,000 in the market, you would be much better off selling that, buying that computer, because that computer, you're not going to lose it. You're not going to ever sell the computer, are you?
No.
Okay. So, and they can't take it away from you, but it is on your net worth. It's on your balance sheet. Buy the computer. You've been wondering if you should buy the computer, hadn't you?
I sure have.
Yep. Now it's going to seem uncomfortable.
Oh yeah.
When you look in your investment accounts and the money's not there.
I guess the biggest thing I've been wondering about, if I was to sell off thousands of dollars worth of stock, how much you think I'm going to pay? What percentage in taxes you think I would end up paying on that? Do you have a number?
I mean, I can tell you with I can tell you pretty. I can tell you with precision that that $6,000 computer is a tax write-off, so it doesn't matter. You'll get it all back.
Good point.
Now, to answer your question more reasonably, which I don't like being reasonable. All right, reasonably, you're in. I mean, you're not in a very, very, very high tax bracket right now. We're going to get you there, right? So you're only going to pay taxes on the realized gain. So, all right. So let's say I'm just going to use this number for instance. Well, I'm going to use $6,000.
Okay. How
much money do you have saved towards the 6,000? First of all, for just computer money,
right at about $3,000 right now.
Okay, so all we need is $3,000. Smith. Yeah. If nothing else, I'm going to help you today. Have you ever heard about worrying about the wrong thing?
Yeah.
Okay, worrying about taxes on $3,000 is worrying about the wrong thing. Now, let me tell you the beautiful news. You're not going to pay taxes on $3,000. So let's say, first of all, have you got some dogs in your portfolio?
Some dogs.
Dogs. Have you got something that you put $100 in that's worth $75? You got some. You have some underperforming. You have some underperforming stocks.
I do think I have one that I bought a bit too high. I believe Apex Technology. Waiting on that Microsoft merger.
Okay. All right. Sell that first, and you pay. There's no gain whatsoever. There's no taxes. You only pay taxes on on your realized gains. Pull up Steve Stewart's comment right there.
Okay. 10% church or to help someone, 10% in education in your field, pay yourself 10% savings, investments, live on the rest.
That's not a bad idea. That's not bad. I would say, Steve, there's a better way, right? Live on 50% and invest 50%. You got to get there. So I don't like to walk before I run, but you know, Steve is pointing out to people who may want to walk before they run. First of all, the first part, 10% to your church or helping someone, I agree 100%. If you could increase that, even better. And by the way, you know, people watching, they get to see us for an hour a day, and they get to see all the videos that you put out there in different places. And so they see just a small fraction of who we are. And there's a lot of things that we do that's not on camera that people don't realize. So I want to make sure you understand that me and April and Paul and this entire company, we're very generous and we're very giving to people in need. But we don't, that's one thing we don't like to promote, is showing off, you know, the things we do for people. So we want to help those people and do those charity things kind of in secrecy. Now, what I'm going to do, Steve, is use your theory there, and I'm going to start sharing 10% of the charity things we do so that people can see, because it is fun and rewarding to see someone who's been helped. You know what I mean? And I think people will benefit from seeing good deeds being done. So when I can already see some of the shade being thrown at us when we do it. When you see us start helping people and showing the world, it's not so we can be seen as doing good. It's so that you can see good things being done. Because would you agree there's enough negativity out there, Smith?
Oh, more than enough.
Yep. But you got to be helping. And that's a great point, Steve Stewart. You got to be helping. You got to help people. And Mike Parker, who was on here last week, Thursday or some point, he made the statement. I've heard of other people say it, but he lives by it. You can't outgive God. So, if you believe in tithing and helping and doing good for others, you don't do it to get blessed, but there is a principle that says the more you give, the more you receive. So be a giving person. Maybe if nothing else, that was helpful to somebody. But I just don't want to miss the point of investing in yourself first, Smith. Buy that computer. Buy the computer. Buy your books, buy your computers, buy all those things first. Make yourself better. That will increase your income, which will allow you to put more money back into your investments. I think we had a pretty good, there's a lot of good information maybe you can disseminate and chop up and spread out there. So before we go, I just want to mention that tomorrow's show, we're going to have Jeff Stearns, Connected Through Cars is his new famous podcast. And it's very, very, very informative. I can't wait to get him on here. He's a sales expert. We may ask him a few money saving tips. Do you have any more tips before we go, Smith?
Well, I was actually talking with Paul and Ty the other night while I was waiting to go home, and this is sort of on the note of what I said last time, as far as avoiding the little things that you do every day. I was going to say if you do have an indulgence, whether that's alcohol, cigars, maybe something more illicit. Hey, if you're doing it every day, do it once a week and enjoy it a little more. You'll spend less. You'll enjoy it more. You won't be sitting around, racking up your tolerance on whatever it is and therefore spending even more. If you're drinking a glass of wine every night, drink it on the weekend. You'll save some money and you won't drink as much.
That's a good point. And it goes back to self-control and discipline. I'm writing these things down. Self-control, discipline. Now, self-control, or more specifically, discipline and self-discipline, there's another word for it. Self-control gets a bad rap. Discipline, willpower. That's it right there.
Willpower. Okay.
Willpower gets a bad rap. Come on in. What you got? Okay. All right. I'll get right on it. They're letting me know I got to go, Smith. Obligations and responsibilities. But willpower gets a bad rap. Because, and I understand it, because some people have more willpower than other people, right? That doesn't make the person with less willpower a subpar person, or a lesser of a person, just because someone has greater willpower. And I think a lot of people look down on those with less willpower. I'm not that person, but I will say that creating some willpower and creating some discipline is a good thing.
Yeah, and focus. Don't focus on trying to create motivation. Create discipline. It'll be there when motivation isn't.
Yeah, that's a good one, Smith.
Hey, I'm stealing lines from Jocko Willink.
I like it.
Discipline equals freedom.
And remember, the most important thing is know the difference between an asset and a liability. Get rid of your liabilities and acquire more assets. Just like Smith's about to get that $6,000 computer. He has my blessing to do it. If you have to liquidate all your stocks to do so. It's going to increase your income. Before you can worry about your investments, you got to have that income. So buy that computer, because that is an investment. Okay.
Okay.
Tomorrow's show, Jeff Stearns. See you guys tomorrow.